Let's talk some more about the AI space with the next guest, who has a new warning, writing an op-ed for The Guardian titled "AI Investors Are In for a Rude Awakening." Joining us today, Elevation Partners co-founder Roger McNamee, of course, an early investor in Facebook and Google. Roger, it's good to have you back. Good morning.
How are you, Carl?
All right, so tell us, what is the rude awakening?
So, Carl, I think the fundamental issue is, let's assume that we're all very bullish on the outlook for AI. The real question is, how many winners do you wind up with in a competitive marketplace? Former CEO Jack Welch famously said, you really want to be either number one or number two. Number three is usually struggling to break even or do just a little bit better. The problem in AI is the entire capital spending model assumes everyone is going to succeed. And depending on how you count, there are between 6 major players and 11. And it's just not, there's not room for all of those players to be successful. And the problem actually gets worse than that, because the industry is ignoring lessons learned on the internet about the right way to do a build out. So we've spent $1 trillion essentially on the highest cost equipment you're ever going to see in this industry. And we're setting it up with a 4-year, maybe a 5-year depreciable life. And the revenues are lagging. I think the economists said they were $50 billion trailing 12 months against $1 trillion invested. Again, if you've got a 4 or 5 year depreciable life, that's not going to work out. And if we're going to shake out anywhere from 3 to 6 of the players, that's going to be difficult.
Right. But have you seen any kind of degradation in demand for that kind of financing that would suggest we're anywhere close to a moment of reckoning?
No, to be clear, Carl. Yeah, Carl, we've talked about this before. I mean, we're in absolutely a spectacular mania, and there's no way to tell when it's going to end. I'm simply making a point that for those who have the flexibility to be, to either make new investments or not make new investments, the thing to think about is, in a market that's primarily going to have an enterprise focus, which players are most likely to win? I mean, do you think that Oracle and Microsoft are going to be more or less competitive, say, than OpenAI and Anthropic? Or even, companies like Google and Amazon, which have really, and Oracle also, which have focused on the infrastructure, they've built it out on the assumption that all of these customers are going to be successful. And it's pretty clear to me that that's just not true. And when the day of reckoning comes, I have no idea. But the longer this goes on, the deeper the reckoning is going to be, and the more dramatic for the stock market. Because big tech is more than 1/3 of the S&P 500. Sure. So, the impact of a decline there is going to be felt everywhere.
Who do you think are not going to be the winners, Roger?
To be honest with you, I don't know. I look at this, and again, when I think enterprise, I think this is about relationships and minimal risk from the perspective of the buyer. And I think in those bases, companies like Oracle and Microsoft have gigantic advantages over startups like OpenAI and Anthropic. I do not understand what role Meta can play in this market. I do not understand what Google's strategy is here and how they get through this. I'm sure they have one. I'm just saying, it's not readily apparent to me when the music stops which chairs companies like Meta and Google and maybe even Amazon or X wind up in.
We just mentioned Anthropic with Mac's report, and I keep thinking back to Dario's, he's the CEO, his prediction that AI could eliminate half of entry-level white-collar jobs within 5 years, which would take unemployment, in his view, to 10 to 20%. He hasn't really backed off of that view, Roger, and I wonder if you think there will be populist backlash against the kind of labor displacement he's talking about, or just simply the rise of utility bills, which are growing double CPI.
Well, Carl, I think the right way to look at this is from the perspective of the corporations that are buying this technology. They view this as a way to radically increase profits by substituting machines for humans. And they're looking at knowledge workers throughout their organizations, not just entry-level ones. I mean, they're looking at programmers, they're looking at lawyers, they're looking at nurses and doctors, they're looking at graphic artists and writers. These are people often with graduate degrees who have relatively high incomes. Many of them have families. So if you say unemploy 20 million people in that category, you don't just create social unrest. You create an issue for the economy because these people have way above average demand. And then on top of that, their health insurance is tied to their work. So you suddenly created this giant cadre of people without health insurance, many of whom are in their 40s, 50s, and 60s, and are actually increasing consumers of health care. So I look at this and just go, there are a lot of problems going on here that we have not thought through as a country. And from a policy perspective, we've focused on the bright, shining light of this is the next big thing that's going to change everything. I actually agree that it's going to change everything. I just think that everything in my definition isn't just the profits of the vendors. It's the whole fabric of our economy and our society.
I just wanted to raise Meta in particular, because I know you're an early investor and you've been critical of the company and you wonder what their AI strategy is. I mean, a lot of people in the market think Meta is the AI winner because what Zuckerberg's trying to do, of course, create, agents for people, for the productivity, for small businesses, and at the same time, he's monetizing the heck out of it when it comes to ads becoming more profitable. And they have that base, unlike an OpenAI, to help fuel what is a very capital-intensive transition into an AI company, and they're also spending the most to acquire the biggest talent.
Yeah, so, Sarah, I think that's absolutely the right way to look at it if you want to be bullish about Meta. My simple point here is I do not think that the consumer and small business-facing parts of this market are likely to generate the kind of revenue you need to justify the capital expenditures that these companies are making. You really need to drive this technology into government, and you need to drive it into large enterprises at huge scale. And you need to do that globally. Again, the industry's already spent $1 trillion. The plan is to spend at least another $1 trillion. And you look at that and you go, wow, how much revenue do you have to generate to create a profit big enough to pay that off? And the answer is the numbers are literally multiple orders of magnitude bigger than the revenues you see today. And that just strikes me as, that strikes me as a difficult bet up here. And again, if you're really deep these stocks and you believe in them, God bless. I'm just saying these are questions that eventually somebody's going to ask besides me. And you want to be thinking about it ahead of time because these are markets and they go down as well as up. And we know that these things are not going to become 100% of the stock market. And we know they're not going to become 100% of the economy. So if that's true, how big can they get? And they're already more than a third of the market cap. I mean, just look at the private companies. A whole bunch of them, if they were in the S&P 500, would be very highly ranked, right? And you look at this and you go, wow, those are super high expectations. And maybe these companies are enormously successful. Remember, the industry in 3 years has gone from 0 to 50 billion in revenue. That's really great. And if they'd only spent, say, 50 or 100 billion to get there, we'd all be cheering. But they've spent $1 trillion. And so you have to ask the question of what now?
Yeah. Well, certainly in the case of Meta, you have walked us through so many chapters of that company's history over the years, Roger. It's interesting that we've arrived at this one now, and we'll talk more in the future. Have a good weekend.
You too. Thanks so much, Carl. Take care. Bye-bye.